How is everyone doing? This is Laura from Keynecht for another essential presentation to thrive in this trucking business. All right, let's talk about something that's a huge part of life on the road, but let's be honest, can be a real headache. IFTA, the International Fuel Tax Agreement. We're going to break it all down and demystify it for you so you're set for 2025. So picture this. You're running a route crossing multiple state lines. You're thinking, great, does this mean I have to file a separate fuel tax return for every single state I drive through? It's a totally fair question and one that can keep you up at night. Well, thankfully, the answer is a big no. That's where IFTA comes in to save the day. Think of it as a pact between all the lower 48 states and 10 Canadian provinces. Instead of drowning in paperwork from a dozen different places, you get one license and file just one single return each quarter with your home state. It is a total game changer. Okay, so that sounds good, right? But the next big question is, does this actually apply to you? Let's dive in and see if your fleet needs to be IFTA compliant. Here's the deal, and it's pretty straightforward. You only need to hit one of these marks. Got a truck with 2 axles and it weighs more than 26,000 pounds? Yep, you're in. Does it have 3 or more axles? Then the weight doesn't even matter. You're in. Or are you running a combo like a tractor and trailer and the total weight is over 26,000 pounds? You guessed it, you're in. Basically, if you're operating heavy commercial vehicles across state lines, IFTA is for you. So why even go through all this? What's the point? It really just comes down to fairness. Imagine buying all your fuel in a state with super low taxes, but then you spend all your time driving on the roads in a neighboring state with higher taxes. Well, that's not really fair to the state whose roads you're actually using, right? IFTA just balances the books, making sure every state gets its proper share based on the miles you drive there. Simple as that. Okay, so you've figured out you need to file. Now for the nuts and bolts, the when and the how. The good news is IFTA compliance has a very predictable rhythm to it. Once you get it down, it's just part of the routine. Everything with IFTA happens in quarters. Quarter 1 wraps up at the end of April. Quarter 2 is due by the end of July. Quarter 3, that's your Halloween deadline, October 31st, and the last quarter of the year is due by January 31st of the next year. And here's a key thing to remember. You have to file every single quarter, even if your trucks didn't move an inch. That's called a zero return, and yep, it's still required. And trust me, you really don't want to miss these deadlines. Filing late isn't just a little oops. The penalty starts at $50 or 10% of whatever tax you owe, and they take whichever one is bigger. So if you owe a few thousand in taxes, that penalty can get painful fast. And on top of that, they start charging you interest every month until you're all paid up. So how do you actually do it right? It really just comes down to these 6 steps. And it all, I mean all, starts with keeping perfect records. We're talking detailed logs of every mile and every fuel purchase broken down by state. After that, you'll need to grab the latest tax rates, and yeah, they can change every quarter. Then it's just a matter of filling out the form, doing the math, and sending in your payment. And the last step is absolutely crucial. You have to hang on to all those records for at least 4 years. You'll need them if you ever get audited. You know, all this can feel a bit abstract, so let's make it real. Let's zoom in on a specific state. We'll use Florida as our example to see how this all plays out on the ground. If you're based in Florida, you've got 2 ways to file. You can go old school with a paper form, or you can do it online. And honestly, it's not even a close call. The online portal automatically does all the math for you, which is huge. You get an instant confirmation that it's been filed, and you can pay right then and there. With paper, well, you're doing all the calculations by hand, mailing it in, and kind of just hoping it gets there on time. And hey, don't just take it from me. This is what the state of Florida says directly. They strongly encourage you to file online, calling it the fastest and most accurate method. You know, when the agency that's in charge of the rules tells you there's a better, faster, more accurate way to do something, it's probably a good idea to listen. All right, let's pivot and look ahead. We want to get you totally prepared for 2025 so you can stay ahead of the game and keep everything running smoothly. Go ahead and mark these dates on your calendar for 2025. The first 3 are just what you'd expect. But now, look closely at that Q4 deadline. The 31st of January in 2026 is actually a Saturday, so the rules give you a little break. The deadline gets pushed to the next business day, which is Monday, February 2nd. That's a tiny detail that could save you from a big penalty. And a few last really important reminders as you head into 2025. Remember, you get a 2-month grace period for your truck decals, so your 2024 stickers are good until the end of February. Never, ever just assume the tax rates are the same. Always download the new sheet for the quarter. And don't forget, your IFTA license has to be renewed every single year. And finally, and I know I'm saying this again, but it's that important, your best friend in all of this is meticulous record keeping. Those logs are everything. So there you have it. We've walked through the what, the when, and the how of IFTA. Hopefully it feels a lot less intimidating now. The whole process has been demystified. So really, there's only one question left to ask, and it's for you, with that next deadline always on the horizon. Are your records ready to go?